600,000 plus 600,000, that is 1.2 million. We at on the other side, we're paying on the total, on the end of our loan, we're paying 1.6 million. So it means we're paying for 2 apartments plus another thing there. Welcome back to Mom and Lee channel, and we're excited to be back. To our regulars, welcome back. To our new subscribers, welcome to the club. And if you have not subscribed, girl, mom, sister, friend, brother, what are you waiting for? Do the right thing. And today we will be talking something new, which is not all about hair, and it is all about finance. I know it is not an easy topic to talk about. For years and years and years, it was not an easy topic for me to talk about. But after some time, I have educated myself, and now I see nothing wrong about talking about finances, and it is the right thing to do. So I hope in the story that I'm about to share, you will learn something, and who knows, it can change your own personal finance journey. So yeah, I think let's get right into it. So I want to share a story from 7 years ago. We applied for a home loan. Note the we, which I will not be getting into. So anyway, we applied for a home loan and we were approved for a home loan. You can imagine our excitement, right? So yes, we signed everything. We checked the installment and we're like, we're good, we can pay this. So it was all done. We didn't bother to check and go through the whole contract. But anyway, I think we probably didn't even understand it. I don't know, but I speak for myself. The other party can speak for themselves. So yes, for myself, I didn't understand, or I didn't even at the time pay attention, or even at least try to understand them. So I take it, I was purely just didn't have any financial education to understand that. And for me, when I just checked that the installment is this much, I was like, okay, good, nothing to worry about. And yeah, that was it. Homeowners, I think I actually felt that I felt good that at least the bank, gave me money. I felt like, oh yeah, actually the bank did me a favor for getting this home loan. There were like many stories that we got from our real estate agent when we were making the application. But yeah, finally we got approved. Okay, it was cool, we're happy, we're excited, we signed the deal, everything was fine, we moved on with our lives. I think round about 2017, round about 2017, as Nicolette, our financial bunny, right? She did a video with some guy where they were showing what you actually pay when you say that you have a bond, or you have a mortgage, or you have a home loan, right? So on that video, they actually spoke about the total repayment over the term of your loan, right? So in our case, we have taken a home loan for 20 years. So what in the video they were talking about was the total amount, the principal debt, including the interest with the admin charges, that you will pay at the end of the 20 years, which in most contracts is written as 240 months, right? So after I checked this video, I actually went back home, was chatting with my husband, or by that time, now husband. Anyway, so I was chatting with my husband about this, and then came home, and then we had a look at this, and I was like, hey, you know, I never like really understood this thing. Then I started to do a little bit of research now to find out, okay, so from our contract, what we actually found was that from the principal debt that we have and the interest rate that we had. So our interest rate was quite high, firstly. So it was at the time of the approval, it was 11.95. And then between 2013 and 2017, because we were on variable interest rate, it had actually increased by 1%. So it meant that now, at the time we were looking at this, our interest rate was 12.95. So if our interest rate had increased by 1%, then it means also that the total repayment had increased from the 11.95 to the 12.95. So it was from the total repayment at the end of the 240 months at 11.95% was going to be 1.5 million. And at the end of the term at 12.95, it was going to be 1.6 million. And the home loan that we had taken was for 599, which is, okay, let's just round it off to 600,000. So you can do your own math now and see that we were actually paying double. I mean, we're paying way much more. We're actually paying for 2 apartments and also getting a change. 600,000 plus 600,000, that is how much? 600,000 plus 600,000, that is 1.2 million. We at on the other side, we're paying on the total, on the end of our loan, we were paying 1.6 million. So it means we're paying for 2 apartments plus another thing there of 400,000. Do you understand? Okay, cool. This bothered me. I did not sleep. I did not sleep, and then I decided to do a little bit of research. Then I found out, okay, you can actually go to the bank and negotiate. Then called the bank, spoke to some lady. I was even scared, guys. I was even scared to call the bank and ask for this reduction of the interest rate. But eventually found some strength. I called the bank, and then they gave us a discount of 0.25. That was something, but I was still not happy. I continued, and then I did my research further, and I found out there was something called refinancing. Okay, so now refinancing is when you take your existing mortgage, you refinance it and you get a new. So basically what you are doing, you are replacing your existing mortgage with a new loan. Okay, cool. Now I needed to find out more about this refinancing thing. I continued to sit on the internet. I called people, I called lawyers, I remember I called ESI attorneys to just double check how much they will charge for a bond registration, because now it means that if you refinance your bond, then it means you must pay for the bond registration again. And then I also I found a lot of information. I remember when I checked through the banks, most of the banks have it on their online websites that if you do an online application, they will actually give you a 50%. I think one of them, I think it was ABSA, who was giving 30%. Okay, cool. Then I was like, okay, now we need a motivation for us to continue with this thing. Okay, we had a discussion in our household, and then we decided, you know what, we want to try this. We want to see if we can get a better rate. And then we applied now to other banks besides the one that we had our home loan. Obviously, we have gone through the point of trying for them to better the rate. It was not successful. And then we were now looking at other options where we try to contact other banks to apply for that home loan and see if they can maybe give us a better rate. Fine, we applied through other banks, and to our surprise, all other banks gave us minus prime rate. And this was like a big excitement. And when we checked, one of the bank actually gave us 9.2%. So from our 12.95 and the 9.2 that we were now getting, we were actually, the difference between those two was like 3.75. Now, if you take that 3.75 and quantify it in terms of money, what it meant for us in terms of money, it means that, let me add this. On the new loan that we applied for, we actually applied for 15 years. So on the existing home loan, we were at for 20 years. And then for the new loan, we actually applied for 15 years, which is 180 months. So in terms of the value that we will be saving, in terms of the money that we'll be saving from the 12.95 to the 9.2, guys, you won't believe, more than 500,000 that we will be saving at the end of the term of our loan. So for us, that was a motivation for us to continue and put through the application. So what we did, one, we found out then what is going to be the penalty from the existing home loan if we do move our home loan to another bank. And then they told us, okay, if we put a 3 months notice, they will not charge us anything. But should we do at that time, then they will charge us, right? So we're like, okay, we're not in a hurry, we don't mind, we will put the 3 months notice. So right, we put the 3 months notice, and then after the 3 months notice, we moved our home loan. And from when we were moving now our home loan, for the bond registration, we got 2% of the bond registration. Secondly, we paid for the initiation fee, which was like 6,000 something, but the amount of money that we paid was less than 20,000, and that was it. So again, what we did was we took we went back to our math, where we had subtracted the total repayment amount from the 12.95 and the total repayment amount from the 9.2. We subtracted the 21,000, I think we paid 21,000. We subtracted the 21,000 that we were going to pay for the bond registration. Again, for us, it still made a whole lot of sense. In numbers, it made a whole lot of sense for us to continue and move our bond to the new bank, and that's what we did. So what is it that I'm trying to share here? I'm trying to say that the lack of knowledge when it comes to financial education is really what is crippling us. I've had my own fair share, and if you are listening to this video and you are going through a similar thing, find out if there's anything that you can do. Make sure that you know exactly when you do take any form of credit, make sure you exactly know what you are taking and go through the documentation. I know sometimes, like I said, financial terminology is very intimidating, but we need to get to a point where we get familiar with it and we speak openly about it. And asking questions is free. Like, you don't pay anything for asking questions. The people at the bank, they need to explain to you. Whoever, the people in the financial institutions, they need to answer and explain things to you. So they will not charge you for that. It's absolutely free, and we don't need to be shy when it comes to our money, because at the end of the day, it's our money. And what I have learned from our situation was that we needed to take control of our own personal financial education. We needed to educate ourselves so that we can make a better decision. When you know better, you obviously will do better. So yeah, that is how we partly conquered some of the mistakes that we have made. And I think I need to mention that between 2013 and 2017, there was a lot of things that had changed in our situation, like in terms of our credit score was much better, and in terms of affordability, our salaries were not the same. So those might have been other factors that contributed to us getting a lower rate. So, but again, what I'm saying is that if you are in this situation, have a look, see if it is fit for you. Then if it is, and of course, the one thing that will really give you an idea if it is fit for you is if you take your own documentation, you sit down, you take a calculator, you do your own math. Our ignorance when it comes to financial education is really at some level being exploited. And if you are watching this video and you have a similar issue, do check it out. Please do your own research. Make sure you do your own math, because I know situations are different. Do your own math. That is what is going to motivate you to either pursue it or not pursue it. I know it's not something that can work for everyone, but if it works for you, then that's good, and this is for you then. So yes, that is our story. I hope it will change something in your own personal financial journey. And yeah, so hopefully there will be more of these videos to come, because I've got loads and loads and loads of things to share based on my own personal experiences. So yes, if you do enjoy this video, please give it a massive thumbs up, subscribe, like, and please do share it with anyone and everyone who you think might need it. And from me to you, till next time, cheers.